Hi, I am Dr. K. Malavi, the Department of Commerce with CA, PPG College of Arts and Science. Today I am going to explain the basic concept of income tax. Move to the next slide and learn about the introduction. Introduction of income tax. The income tax in India is governed by the Income Tax Act 1961. It is a direct tax, which means the tax is paid directly by the person who earns the income. Central government collect income tax from the individual and business based on the earnings. The amount of tax depends on the income of the taxpayer. India has one of the largest taxation system in the world because it covers the large number of people and the business entities. The Indian taxation system is well structured and based on the provisions of the Indian constitutions. Let's move to the next slide and learn about the meaning. Meaning of income tax. Tax is a compulsory payment made by people, business to the government. It is not voluntary payment. The government was the collected tax money for the public welfare such as roads, schools and hospital. Move to the next slide and learn about the history of income tax in India. History of income tax. Income tax was introduced in India by the British in 1860. Between 1860 and 1886, several experiments were made in the tax system. The first Income Tax Act was passed in 1886. Later, the Income Tax Act 1918 was introduced but only for a short time, was replaced by the Income Tax Act 1922, which remained force until 31st March 1961. Next, we will discuss about the objective of taxation. Taxation means the government collect money from people and businesses to achieve social and economic goals. The first objective is raise government revenue. Taxes provide money for public services like education, hospital, roads, and defense. The second objective is redistribute income and wealth. Higher income people pay more tax and the government uses this money to help poor people through welfare scheme. The third objective is to promote economic stability. Taxes help control inflation and support a stable economy by affecting spending and investment. The fourth objective is encourage economic growth. Taxes help the government collect money for development projects and encourage investment and productions. The fifth objective is regulate consumption. Higher taxes on harmful goods like tobacco and alcohol reduce their consumptions. The sixth objective is protect domestic industries. Taxes on imported goods help local industries compete with foreign products. The last objective is promote social welfare. Tax revenue is used for public services and social security programs to improve people's standard of living. Next, we discuss about the features of income tax. In the first point is direct tax. The person who earns income pays the tax directly to the government. The second one is levied by central government. The central government collect and manages the income tax. The third one is annual tax. Income tax is charged every year on the incomes earned in the previous year. The fourth one is tax on total income. Income tax is charged on the total income earned by the person or business. The fifth one is progressive in nature. As income increase, the tax rate is also increase. The sixth one is compulsory payment. Paying income tax is mandatory if income is above the exemption of limit. The seventh one is based on ability to pay. People with higher income pay more tax than people with lower income. The eighth one is residential status. Tax depends on whether a person is resident or non-resident. The ninth one is Income Tax Act. Income tax is collected according to the law. The 10th one is government revenue. Income tax is a major source of government income for development and public services. The 11th one is promote social justice. Income tax helps reduce income inequality by collecting more tax from higher income people and using it for a public welfare programs. The 12th one is provide deductions and exemptions. Income taxes offer deductions and exemptions to encourage the people to save, invest, and support the economic growth. The 13th one is helps in economy. Income tax control inflation and keeps the economy stable. The 14th one is collected through different methods. Income tax is collected through different methods for TDS, advances of tax, and self-assessment tax. The 15th one is encourage proper record keeping. Income tax encourage people to maintain proper financial records and documents. Thank you.